Hey, this is Matt from InvestiQuant. Today is Tuesday, October 26, 2021. The market's gapped up today following yesterday's 52-week high close, and from that open, we pushed higher and then have seen some failure and are now trading back near the lows of the session. We are still above yesterday's closing price, but we are trading in the bottom portion of the daily range. This is the S&P here in the top left chart. So you can see here's the open. We tested higher, consolidated, and then rolled over. We made it just about down to yesterday's close before getting a little bit of a bounce here as I am recording this. But bottom line is we're trading above yesterday's 52-week high close, but in the bottom half of the intraday range. And that's something that we can test here and discover, so that's what we will do. Let me go ahead and grab all four instruments here. The setup's going to be based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, for this study, what we're going to be looking at is trading above the prior day close, but in the bottom half of the intraday range on the heels of a 52-week high close. So the first thing I'm going to add is in this post-open filters, I'm going to say that the 3 o'clock price is above yesterday's closing price. I'm going to do that by going to the intraday close versus daily levels, hit equals for above prior close. That means the 3 o'clock price is above yesterday's closing price. Next, I'm going to go to the intraday close versus intraday range, and I'm going to say that the 3 o'clock price is in the bottom half of the intraday range. So if I hit equals next to close and bottom half of the intraday range, that'll add that filter to the study. Next, I can go to the price patterns library, and I can say that yesterday closed at a 52-week high close. I'm going to grab that from the active today section. This section is telling you what is true for today's session based on what happened yesterday. So in the new highs, there is day after 52-week high close right here. I'm going to click on that. When I click on it, it'll add it to the test. It comes from this new highs category, and if I scroll down here just a little bit, you will be able to see it. It's selected as equals there. So that concludes all that I need. Since it's a 52-week high close, I don't need to add any moving averages. That kind of gets it all with that single pattern. So now I can click View Results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when the prior day made a 52-week high close, and then at 3 o'clock on the day following that 52-week high close, you're trading in the bottom half of the range, but still above the prior 52-week high close. So you're likely, or you're trading at what would be a 52-week high close area at that point in the day, but you're in the bottom half of the intraday range. So historically, we've got 53 samples in the S&P. We've got 49 in the NASDAQ, 42 in the Dow, 33 in the Russell. Win rates on these are all pretty similar, right around 60%. So the S&P coming in at 62% of those have closed above that 3 p.m. price. For the NASDAQ, 61%. For the Dow, about 60%. And the Russell, the strongest at 64%. So some agreement there. If we look at the average moves, the average win is larger than the average loss for the S&P. That is not the case for the others. So the NASDAQ has a larger average loss. The Dow has a larger average loss, as does the Russell. So win rates are favored towards the upside on this pattern, but if you look at the average moves, 3 out of 4 of them have had bigger moves to the downside. So hopefully you found that helpful. Good luck today, and we will see you next time.